Thanks a lot to be in my channel.
Definitely, Manish. Thanks for having me over.
I heard so many things about you. You are a CEO of Alfiva, which is a financial advisor startup. We have humans who are managing the assets, and we have Alfiva managing the assets. Do you ever think Alfiva will replace humans?
There would be more and more of AI. There would always be a human involved.
How smart and intelligent people make poor financial decisions?
Charlie Munger said that he has seen so many smart people losing their shirt for 3 L's of life: liquor, ladies, and leverage. So, leverage is where you overextend your finances.
Why do people feel so anxious, about money?
An average 34-year-old 25 years back could buy their first home with the salary that they were getting. Now, it's not possible for an average 35-year-old to get their first home with the salary they are getting.
Do you think that AI can reduce financial anxiety?
100%.
So, what's one belief about money that people needs to unlearn? Let's get started. Thanks a lot to be in my channel. It's called Mindfulness with Manish, and I am so much delighted to have you. I heard so many things about you. You are a CEO of Alfiva, which is a financial advisor startup. You have worked in a lot of financial companies, including Citibank and other financial institutions. Thank you so much to be in my channel. Can you tell me a little bit about your background from your words? The audience would like to hear where you're coming from, where were you born, and your journey so far till here.
Definitely, Manish. Thanks for having me over. My name is Lord Munjal, founder CEO of Alpheva AI. I've been a 3 times founder by now. And my first venture was around finding a health tech company called Dr. Insta. And a few years back, I got an exit, and then that led to the founding of America's first rent-to-own exchange. So it was in Fintech / prop tech domain. That venture did not do that well. So we paused the operation there and then went back to the drawing board as to how can we fix some other major problem. And that's when, we buttoned down Alpheva AI because that was a regular problem for the last so many years that I was seeing in the industry. And it was not easy to solve that problem earlier because the AI models, the foundational LLM models that are needed, were not having very complex, sophisticated reasoning the way they have now. So thankfully, with these foundational models developing far better reasoning and continuing to do so, it became less challenging for us to develop a concept like Alpheva AI. Before founding these ventures, in my last role, I was the CFO and head of investments for Citi Holdings in New York City. And then prior to that, did a long stint with the Bank of America Merrill Lynch. Prior to that, did a couple of stints in management consulting, venture capital space, as well as corp dev, which is basically mergers and acquisition space.
Got it. Okay. So you have experience across the board, like you have seen investment banking, acquisitions, merging, and things like that. So it's a very complex space. So I don't want to say which area do you like the best, but I think having those experience leads you to, having the broader knowledge of the industry, where exactly is missing. We have the Robin Hoods of the world. We have the big, investment banking. You have Fidelity. You have other things like E-Trade. So what made Alpheva so special? What made Alpheva so different that you thought, okay, this is something that you want to go up?
Whole bunch of things, Manish. So the way it works with Alpheva is that you download the app. We are available on App Store, Play Store, or you can log in using our website. You answer certain fundamental questions around your financial profile. Questions like, what's your investment horizon? what is your risk propensity, and then you connect through open banking APIs in a very safe and secure setup your bank account, your brokerage account, and your loan account. Now, the Alpheva AI platform has a holistic perspective on your assets, your liabilities, your income, and your expenses. Alpheva also has a perspective on your credit profile, as well as your long term, mid term, short term goals and your budget planning. On top of that, you can manually key in certain things that are not available on online channels. For example, you lent money to a friend. Nobody knows about it but you can add that in Alpheva. If your great grandfather left you a collectible watch, or your great grandmother left you a collectible necklace or some other asset in the country or outside the country, you can manually put that in Alpheva platform. So Alpheva having a holistic understanding of your finances and credit and evolution of your finances, as well as changes in your credit profile, is now in the best possible position to advise you, counsel you on what to do. You can use Alpheva to figure out where to invest next, taking into account your goals. You can also use Alpheva to see where you can save money, taking into account your expense history of the last 2 years. You can also use Alpheva to find better financial products than you have currently with you, because we have the financial and the credit profile, so it's easy for us to match you with the better provider out there. That goes for your mortgage, that goes for your home loan or car loan or student loan or personal loan. That also goes for any insurance product that you are having currently, from your car insurance to your home insurance to your any other item insurance to your health insurance. Everywhere where you paid money to get the insurance, Alpheva will tell you whether there is an opportunity for you to save money by lowering your premium, keeping the insurance coverage the same, or you should go with a different deductible than you have, because we are in the best position to address those questions for the users. The other companies out there are either pure banking apps, which provide you information on that specific bank account of yours, whereas Alpheva aggregates all your accounts. So our average American has 4 to 5 cards. All 4 or 5 are integrated in Alpheva, whereas your one bank account app would just talk about that specific bank account and then won't provide you advice and counsel, and also would not give you inputs whether there is an opportunity for you to get a better financial product, whether it is a loan or an insurance or a credit card that you have. So that's where Alpheva is exponentially better and materially different than the other pure fintech or financial services companies apps.
Yeah, I think that makes a lot of sense. I'm a user of Alpheva. Before this podcast, I have to use it. So I downloaded the app. The user experience is so seamless. So once you are in the app, it asks you to connect to different your financial institutions like Chase or Wells Fargo and all of that. After you connect them, then it's a AI. So basically, it asks you questions, and you can ask questions. How like what was the spending you did last travel, things like that. So it's so powerful. No other companies are I've known in my knowledge. Nobody is doing that. So that's kind of makes it different, I would say. So good job on that. But before we dive more into the product, I'm so excited about the product. Let's more talk about little bit about the financial market, financial institutions, and things like that. So I know you have been you have already worked in healthcare, real estate, venture capital, and now this is AI finance that the company you have started. What patterns of human behavior do you seeing across these industries?
Common and the consistent pattern that I see across all these industries is people struggle to understand the second order consequences of the decisions in future that they would have to deal with for the decisions they are taking today, whether it is financial services or healthcare. Common theme, people don't fully realize how the decisions they are making today could and would impact their tomorrow.
Right. Okay. And how these large institutions think about money?
A large institution work on spreads, so what we call NIMs, net interest margins, uh, especially banking institutions that I understand you were talking about. So you figure out your cost of borrowing money, which is everyday American depositing money in their checking or savings account. And then there is a cost, direct as well as indirect cost of borrowing that money. Direct is what you are paying as interest to the user. Indirect is, SG&A, infrastructure, ATM costs, electricity, internet, and all line items that you could think of.
Operation cost, yeah.
Operational costs. And then what is the revenue from lending money, which is the interest rate you're charging to people for borrowing money from you as a bank to buy their car, buy their home, fund their education, fund their businesses. Banks look at it very quantitatively and see, this is my net interest margin, and that's how I have to go about it.
Got it. Okay. So there's a lot of costs associated with big institutions. That's what you're talking about, like operation cost and direct cost. Right.
Yes.
But for companies like the startups like you guys, it's just a power in the hands of the user, right? Nothing else.
No, for companies like Alpheva too, there is a lot of cost. Cost is of infrastructure that you have to put around developing the product, scaling the product. There is a cloud compute cost.
Right.
There is a LLM token burning cost. There is LLM training cost. There is cost of the human capital that you're putting into the venture. Then there is a marketing cost. So a lot of costs for AI first companies like Alpheva as well.
Got it. Okay. So when did you realize, that financial institutions and advice coming from those financial institutions are broken for most people?
I have been seeing it almost all my life. I have been a finance professional all my life, a CFA charter holder, where I saw that financial advice was limited to just the top 1% because financial advisory remuneration is dependent upon what we call AUMs, asset under managements. So financial advisors charge 1 to 3% of assets under management, which means that if everyday American doesn't have at least $300,000, then these financial advisors would not be interested in giving financial advice to the everyday American because anything less than that would not bring enough revenue for them. I mean, you can multiply 300,000 with, call it 1 to 3%. So they need that kind of money, at least $3,000 to have you as their client. Otherwise, it is not worth it for them. $3,000 a year, which comes out to be $250 a month, because financial advisors in general couldn't even scale beyond 100 people. So average financial advisor cannot give advice to over 100 people because you have to do the phone calls, you have to email, you have to meet, and
They can't scale.
There is only so much time in it. So, and also their advisory was limited to just stocks, so equity only. And there is no advice around other dimensions of your financial life. So that's just one subset of your financial life, not your whole financial life. Most Everyday Americans have mortgages, car loans, and other insurance products that they consume. Stock investment is just a very small subset of their financial persona.
Got it. Okay.
So the issue was one, advisory was limited to the top 1%. And then, even in that case, the advisory was limited to just stock investments, not other areas of finance. And this problem has been consistent not just in US but also across the board. But with the advancements in machine learning and artificial intelligence, now you can give a product which is at scale and could be used by everyday American. A good analogy, Manish, there would be, you know, the world is mostly literate now. But just 200 years back, most of the world was not literate. Probably a very small percentage of the world would know how to read and how to write. Now, imagine you are in a village where there is only one person who can read and write, and you are going to that person to either have that person read the letter that you got or write the letter that you have to send. Then the bottleneck becomes that person, and that person is considered a very learned individual in that village or the countryside because others don't have that skill. Now, fast forward, general literacy went up. Most of us learned how to read, most of us learned how to write in the last 200 years. Just 70 years back, before the availability of calculator at mass scale, if you would ask someone being a literate person, hey, what is 385 multiplied by 277? And the other person is able to answer that question in a quick second, you would say this person is a math genius, a math whiz. But then calculators came, the skill got democratized, and now you say, oh, yeah, you can do it, which is great, but I can do it too. I just have to pull my calculator, right?
Yeah.
So same thing goes for financial advisory too. In the past, you would need a very smart finance professional to give you advice, but now Alpheva AI can do it for you. You don't even have to understand the nuances of finance or mechanics of finance, and yet the answer comes out to be something which is protecting your best financial interests, helping you make more, save more, and stress less.
Yeah, that makes sense. Even I was looking for a financial advisor for a long time, a person, because, and then I asked my friend, they recommended me a person, but there's so many hours, and then you have to allocate a time, and there's so many things that they can help. But while using your app, right, it does everything. Like it's a financial advisor, basically. You just have to it just needs to understand your ecosystem and then advise you based upon that. And then you can ask questions and things like that. So I think it can easily scale. I can see the potential of millions of users using it. So yeah, I would like a good job on that. Yeah.
Thank
So
you.
my next question is, if you had to compress your founder's philosophy into one sentence, what that will be?
That's a fantastic question. Compress my philosophy in one sentence. Um, Work hard, party hard. That's my philosophy. Uh, Try to get the most out of every second that God has given you. Don't take life for granted. Have a bigger purpose, bigger objective in life, and work as hard as humanly possible to pull all the stops from the journey toward achieving the objective.
Yeah, that's well said. Yeah. So let's focus some of our discussion on the core problem again. About we touch base a little bit about the financial institutions. So over 200 million Americans struggle with money. They don't understand money. I think we come from India also, and India the financial education is not taught in our education system also. We learn through it through videos, through our friends, through advices and things like that. Is that a knowledge problem or a discipline problem or a system design problem? What do you think the core problem lies?
I think it's combination of all of the above. Many people don't get first-hand exposure to money or finance at an early age unless you belong to a business family which ropes you into business affairs, and then you can learn it through the school of hard knocks, or you go to some academic program, CPA, MBA, kind of programs for you to learn one or two things about finance. Absent that, you learn it the hard way. I've seen people who are very good with math struggle with understanding the second order consequences of their financial decisions today because they didn't have any exposure to finance. So I hope that answers your question in a nutshell.
Yeah, I think that answers my question. So, related to that, so how smart and intelligent people make poor financial decisions, and how and why?
By not understanding the full ramifications and complications. Charlie Munger said that he has seen so many smart people losing their shirt for 3 L's of life: liquor, ladies, and leverage. So, leverage is where you overextend your finances, borrow money at a high cost of capital, deploy it in a business, and so basically stretching beyond your means. And I see it all the time.
I see. Okay. That makes sense. And with the use of Alpheva AI, it understands your mortgage rate of interest and advises you based upon, okay, there's a new rate of interest that's in the market. You can refinance and things like that, right?
Totally. Not just that, we have a human in the loop. So as soon as AI detects that, Manish, taking into account your FICO score, taking into account your income and expenses, assets and liabilities, we can help you get a mortgage rate which is 2% lower than what you have currently. So even after factoring in cost of refinancing, you would save, call it $1,300 a month. As soon as Manish says yay, Manish gets connected to a licensed mortgage broker. Now the mortgage broker works with the customer and gets the customer a mortgage which is cheaper than what they have currently. What is
Got
more
it.
exciting here is where we want to take Alfiva. So where we want to take Alfiva is make Alfiva agentic executioner of the financial decision on behalf of the user post the consent of the user. So basically, you got a $20,000 annual bonus at the end of the year. Alfiva sees that money coming in and says, this is what we had discussed in terms of your investment and saving strategy. We see that you have $5,000 of high credit card debt. So let's retire that. And for remaining 15,000, let's invest 30% in S&P 500, 20% in NASDAQ index, 10% in gold, 10% in crypto. So basically it gives you a breakdown of where
Wow.
to invest. Now this is advisory so far. The moment the customer says yay, the money moves from, call it your Bank of America checking account, to your loan account to retire the debt, to your brokerage account to make investments on your behalf. So it's complete agentic execution. You don't have to go to those individual accounts or individual apps to open those apps and do the transfers.
It does it automatically.
It would do it automatically when it become agentic execution. So we have been in talks with SEC and a few other regulatory bodies, and right now it is in review because you are dealing with people's money as to when it could be agentically executed. But at least technology wise, we have the technology to make it happen today.
Okay. And it understands the market, right? So it understands the gold prices are up or down. So if it's up, it doesn't advise it, investing in gold. Example, correct?
It would look at the future prospect, that what is the upside left in investing in gold, what is the future upside left in investing in crypto, what is the future downside. in investing in these classes, and it would also marry that with your current financial condition and where you're invested now. Look, if you already have a huge exposure to gold and all you have is, let's say, $100 and 99 of them are invested in gold, it would never tell you to invest your last dollar in gold as well. And it would tell you, hey, listen, you have a huge concentration risk. You're better off diversifying your portfolio into different asset classes than keeping it concentrated in one asset class.
Got it. Okay. Yeah, I think that makes sense. So when you say Alfiva is 10x cheaper than Goldman, or 1x cheaper than Buffet, what does that really mean to you?
Yeah, that's a tagline that the marketing department came up with. The point that we were trying to make was that with Alfiva, there is a very small subscription fee. There is no 1 to 3% of the assets under management that Alfiva takes from you. And it's just as smart as Warren Buffett.
Got it. Maybe Warren Buffett is also using Alfiva.
I hope so.
Put Alfiva, yeah, no, we have humans who are managing the assets, and we have Alfiva managing the assets. Do you ever think Alfiva will replace humans, or the future will be both hands in hand, we're going to work together for financial advisory things?
Yeah, so currently Alfiva is not managing the assets. We are just advising the individual who is using Alfiva to how to manage the assets. But you are right that at some point of time in near future, all cars will be self-driving and all financial decisions will be agentic. So which means that you give a command and then financial decisions with your consent are made by the agents, not by you. Just like your car, you give a command, takes you from point A to point B.
Right. So it's going to be a mix of both, but in the future, it's going to be AI.
There would be more and more of AI. There would always be a human involved. But guess what? As we talked earlier, that a human being cannot scale above 100. But now with this, you're talking about millions.
Yeah.
So the human productivity increases exponentially. The same person can oversight, review the responses that are generated by AI. The rate is far lower because guess what? AI wouldn't fight with his wife or husband before giving advice to a client and giving a bad advice to a client because they are in a bad mood. AI doesn't have any such emotions. So error rate would be far, far lower with AI advisory than a human advisory. AI would not get distracted, unlike a human being could get distracted with different things. So these are the benefits of leveraging AI for doing this. But a human being would always be involved, just that it could scale better for all of us.
Yeah. So my next question is all about the psychology part of the money, So from the psychology point of view, I think the first question that comes to my mind is, why do people feel so anxious, about money? Like they feel a little scared about investing, like how to earn well, how to increase their net worth. Money keeps on sitting in the bank account. They keep on waiting for, the rate of interest goes down to buy the house, or, whether to put the money in stocks, things like that. So why do people feel anxious?
So you're right. Financial anxiety in the country is at 80% level, which is very high. And it's been going on for the last several decades. What happened was, with the advancement of technology, availability of mass internet, America saw a lot of job losses to offshoring and nearshoring. So salaries and wages somewhat flattened in the country in the last 20 years. Salary growth has not been very high in the last 20 years. Although things have continued to become more and more expensive. So an average 34-year-old, just 25 years back, could buy their first home with the salary that they were getting and a nice car and equally good vacation at good places with the salaries they were getting. Now it's not possible for an average 34, 35-year-old to get their first home with the salary they are getting. So financial anxiety in this environment would increase exponentially, because on one side, cost side of the equation keeps on escalating, but on the other side, the income side of the equation is not growing proportionately, leading to huge financial anxiety. Also, financial products are abundantly available in the country, which means that you could spend today what you're going to earn tomorrow, but tomorrow is coming too when you have to pay for what you spent yesterday. And then, as a result of which, most finances for most Americans go haywire, and further, increasing or aggravating the financial anxiety levels in the minds of everyday American.
Got it. Okay. And do you think that AI can reduce financial anxiety?
100%. By helping you get better returns from your investments, by helping you save more on the different financial products that you are consuming that we talked about, by helping you reduce your discretionary expenses, a huge reduction in anxiety could be achieved by leveraging AI.
Makes sense. So, what's one belief about money that people needs to unlearn?
Just 2 generations back, they would teach us to spend what you have earned, not spend what you are going to earn. So, in the current generation, where credit cards are easily available and accessible, on top of that, you have BNPL, buy now, pay later programs, where you're consuming the product or the service today and then paying in installments over a period of several months, is probably not something that you should use at mass scale. I understand that sometimes the need of the hour is such that these tools, these instruments should be used. But if you could avoid them, then please avoid them for as long as possible. That's one thing that we all have to unlearn, because these companies, credit card companies, BNPL operators, have done a fantastic job at marketing their products and services. So the world has gravitated toward instant gratification than working toward achieving delayed gratification.
That's well said. Sounds good, Lord. I think for the next few minutes, let's focus on the big vision of where the financial industry is moving. Do you think that what does the personal finance looks like in 2045? Like after 20 years, what does the personal finance looks like?
I don't have a crystal ball, but in my vision, finance will be far more sorted for everyday American and everyday world citizen than it is now. Most of the finance would be done through digital currencies, whatever form they may take, stable coin or government regulated currency. Physical currency would be even far less, maybe not even there in that well connected a world. I mean, we already see a massive reduction in the circulation of physical currency. That probably would go away by 2045. Everything will be digital. Your financial decisions would be digital, whereby you just give one prompt to your AI agent, and from there onwards, unless you change it, the same prompt gets executed upon. You're getting a salary of $100, you want to invest $20 every month, $20 get invested in the best possible risk adjusted return on capital generating instrument for you. Your bills get auto paid. You just get a notification, and even the notification is received by AI. So if something is haywire and needs to be flagged to you, it will be. Otherwise, you pretty much leave it on cruise control. And take it from
you
there.
just do what is most important. You wake up in the morning, you get a AI avatar kind of thing notifying you, okay, everything is taken care of, or you don't even get notification, right? Everything is, seamless underneath.
You get notification if there is something screwed up.
Yeah.
Otherwise, you assume that it is fine. So, like for example, for a home security company, they don't alarm if everything is fine. You can go on a long vacation thinking that your home is safe and secure because you have safety cameras and alarm system, and if something goes wrong, call would be made to the police station in the neighborhood, call will be made to you, and you guys would be informed. Same thing would happen to finance too, whereby that notification will be sent to you if something is wrong. Otherwise, it's working fine. Everything is working fine. Nobody needs to be disturbed.
Yeah, that makes sense. So, one question I have is, if think about this, right? So, if Rockefeller or JP Morgan were alive today, how would they use AI?
Fantastic question. Alpheva actually has an ad on that. I think there are two opposing forces at play. One school of thought would say, if only Rockefeller or JP Morgan or Vanderbilt had access to AI and others did not, then it gives them a humongous competitive advantage, and they would generate gazillions of dollars more than they generated by building their empires back in the day. But then the counter argument is, if AI is democratized and everybody has access to financial advisory through AI, then maybe it's a great equalizer. Then maybe these guys would not be able to generate any empire. Why? Because everybody has access to the same knowledge. If everybody knows that the next big thing is this, then everybody would put money in the next big thing, and it would turn out to be true, and the next big thing's price would be way higher than now, and then it's already a big thing. It's not the next big thing. So then the competitive advantage of some people knowing that this is the next big thing gets taken away.
Got it. Okay. So you think that, those people will have knowledge and everyone will have the same knowledge, so everyone can become rich basically, with the same knowledge everywhere.
Yeah, because knowledge is everywhere, right? Just like
Yeah.
calculators, as I said, if everybody knows how to use a calculator and figure out what is 399 multiplied by 277 in 3 seconds, then what a value add is that math whiz who could do it in a quick second using his brain, bringing to the table? Nothing. Everybody has that skill.
Right. That makes sense, Lord. So let's turn around and focus on your personal lens. So your personal journey. So what was the biggest financial mistake you have ever made in your life?
It's a great question. Biggest financial mistake that I made in my life.
Or
Looking
maybe
back,
nothing.
no, I'm sure I made quite a few mistakes. I
Buying an
started
expensive car.
certain ideas which did not pan out that well, becoming a money drain on my resources. Those are some mistakes, but they were like great learning opportunities. Some investments which went south, bad mistakes. I was a investor in Russian stock market and did not realize or capture the geopolitical risk of Russia, waging a war on Ukraine, which led to Russian stocks being banned to be held by Americans. So lost money there. So these are some of the financial mistakes that I made in my past life.
Okay. Yeah, I think everyone makes mistake. From my point of view, I invest, like when I was a little younger, I invested in stocks, especially, action cameras, GoPro, without researching and anything. I was thinking, oh, GoPro is an amazing camera. everyone will use it, is going to grow in the future. But then there's a lot of competitors came out, so I put a lot of money in GoPro and everything went away. So similarly,
I hear
another.
you.
Yeah.
And I would say that the world that we live in is a dangerous place now. Like the instruments of mass scale gambling have never been this accessible to people as they are now. Look at prediction market, right? It's nothing but gambling. People are gambling on US-Iran war. People are gambling on all kinds of stuff with insider information. The other day, there was an article in Wall Street Journal that a large amount of money was wagered on if Jeff Bezos would show up for Super Bowl or not.
I see. So
And
anything they're gambling.
anything they're gambling. And, and sad part is for now, it is not illegal. I'm not sure if it is legal, but for now, it is not illegal. So
Yeah.
now you don't even have to go to a casino. You can gamble in your bedroom on all these events happening around you. And that's a very dangerous place and dangerous way for a retail consumer to lose money. So
Yeah. It must be, the FIFA World Cup is also happening. There must be gambling over there as well.
there are people gambling on all kinds of things. You
Yeah.
could gamble on whether you would step out in next 2 hours out of your home or not. And people can bet on that.
People
So,
can. Okay. So what's your relationship with money today compared to 15 years ago?
my relationship with money has been consistently same. I consider money as a means to achieve what I want to achieve, an instrument which could make my life better, more convenient, instrument which I can use to deploy resources to build something. So, looking back in the last 15 years or 20 years, my relationship with money has not changed much.
Okay. Like the way you were investing before and the way you are investing right now, it's same.
So, in the past, I would be a passive investor. Now I'm a more active investor. I invest in startups. I'm investing in my own company, Alpheva. And maybe 15 years back, while being in corporate America, I didn't have the time or the resources to invest the way I'm investing today, which is like listening to the pitches of the other fellow founders, building a business. All these things require time and more active management. So that has changed, but the philosophy has not.
Okay. Okay. Makes sense. If someone in their 20s is listening to this podcast, what's the one financial advice and, advice, yeah, you want to give to them?
Start saving early. Think of founding a business which is catering to a specific need of the society that you live in, and try to scale it. Third would be stay away from gambling prediction market, because there's nothing good that will come out from these instruments for a retail user.
The three L's you mentioned, right? Liquor, ladies, and what is the third one?
Leverage.
Leverage.
Yeah, that too.
So, what does financial freedom actually mean to you?
Financial freedom leads to freedom of your calendar too. You book time with whoever you want to book time. You speak with whoever you want to speak. Nobody else controls your calendar. You are the master of your destiny in a way, if you have financial freedom. You can deploy your resources to build a business. You can deploy your resources to improve the life of your loved ones. So that's what financial freedom brings to the table for most of us.
Yeah, I think that's well said. Sounds good, Lord. I think these were some initial questions I have. But before we close and the podcast, anything else you want to talk about? Any last, sharing topic you want to say, or advice to the audience? Anything you want to, discuss?
No, I will just say thank you for having me, Manish, and my best to all your listeners and viewers, and strongly encourage everyone to achieve their financial freedom and make more, save more, stress less is my motto.
Yeah, and
Use
that's
as much of AI as possible in your financial decision making. It would always steer you in the right direction. The quantum of mistakes made by AI in your financial decisioning would be far, far less than any human advisor you could rely on. If you look at Alpheva AI, it's already smarter than the the smartest of the financial advisors out there in the world. And that's not just limited to Alpheva AI or financial advice. Today, AI is far more advanced than the best of the chess player to beat the chess player. Very soon, AI will be more advanced than the best of the plastic surgeons out there. So AI is already far more advanced in driving, vehicles than most human beings are. So massive strides of improvements are happening, and human beings should learn how to use it to their best interest. It's a tool, not the master of a human being.
yeah. That sounds good, man. Nice to have you again in the podcast. There was a lot of learning that I did. I hope that from this podcast, I gonna continue. I will be, the daily active user of your app. And through me, through this channel, my followers will also, learn about financial independence, and they will download the app. At least you will get 1,500 downloads when we're gonna publish this podcast. So, thank you so much to be in my channel. Thank you.
Thank you, Manish. Have a good day.